We're 2.5 hours into trading on Friday, January 14th. Hello, traders. Thank God it's Friday. We've got a little bit of market selling today. Got an extended weekend. We have earnings season unfolding. Lots of material to cover. I'm not going to go through my trades from the previous video because I've been highlighting stocks that are setting up well for selling out of the money bullish put spreads. That doesn't mean that they have to take off today. Doesn't mean they have to take off tomorrow. They just have to hold their current support level. They can even move a little bit lower. We're selling those put spreads below technical support on the strongest of stocks ahead of earnings season. These stocks have a tendency to rally into the number. So we don't have to nail our entry as we would need to do if we were day trading. So that's still the best strategy. We've got a bit of a market pullback, and I want to spend time on the market. So let's take a look at what the market is doing on a macro basis, on a longer term basis. And then we're going to drill down and take a look at what we've got working right now. That context is super, super important. It's important if you're a swing trader. It's important if you're a day trader to get that longer term perspective. So here's what I currently see in the market. We've got this drop in September, pretty dang sustained relative to what we've seen in the past, but not to worry. There's our nice, beautiful year-end rally. We get into November, and then all of a sudden, we have another drop. Well, okay, it recovered quickly, but then we have another drop and another drop. And now if we start to overlay the major moving averages, we'll put the 200, we'll put the 100, we'll put the 50-day up. What we need to do as traders is we need to recognize when conditions are changing. We haven't seen tests of the 100-day moving average this frequently in a couple of years. You can see in September, okay, well, September's historically a weak month. So we get a little nervous jitters, okay, some profit taking, bullish speculators flushed out, find support, off to the races. To test it again in November, to test it again in December, typically the most bullish periods of the year, that's not a good sign. Uh-oh, here we are again, testing it another time. Well, that's okay. We'll rally off of that into earnings season. Now we're having weakness again, and we're going to test that 100-day moving average again. We do not want to be testing it with greater frequency because that is a sign that the selling pressure is starting to build. Let's zoom out, and then you'll be able to see clearly what I'm speaking about. And there is your 100-day moving average. If I drew it all the way back down here, you can see we haven't touched it in a long time. And when we do, these moves are infrequent. Maybe, once every 2 months you touch it. And sometimes we go many, many months without even coming near it. Here we go. 1, 2, 3. Not good. You can also see that where we had a nice upward sloping trading range back in here, all of a sudden, we're starting to form more of a sideways trading range. This is how bullish markets transition. They don't instantly go whappa and down. They start to get into a sideways range and test the high and test the low, test the high, test the low, and then gradually they start poking below and you start closing below these major moving averages for days and weeks on end. Well, that's when you know that you have to be careful on a longer term basis. I think right now, second week in January, we're starting to see some signs that this market rally is exhausted. Does that mean that I go out and buy a boatload of puts right now, Pete? Because dang, how come stocks are so high? They gotta sell off, right? No, they don't. What this means is that if you're in the habit of previously buy the dip, buy the dip, buy the dip, you got to be a little bit more cautious. That strategy will work and you've got to be patient. But what it means also is that every time on those dips, you don't want to be as aggressive as you were in the past. Perhaps you're buying calls. Now you'd still want to give yourself some cushion and sell out of the money bullish put spreads like we are doing right now. And you need to expect that instead of a go-go market where you can come in and you can pretty much across the board just buy anything, buy tech, buy anything, and you're going to get this type of release. Now You may get that dip and you may get a very temporary bounce for 2 or 3 days, and then you can expect some selling pressure to creep back in. So you've got to be more passive with your targets off of these bounces as well. The point that I'm trying to make is that you need to be conscious of changing market conditions on a longer term basis because it impacts your shorter term trading. Market first. Let's drill down and let's take a look at what the market is currently showing us right now. We'll stay on that daily chart for a minute, and you can see how we had this drop to the 100-day moving average. We had a bullish hammer. Now, this is what I want to reinforce in this video. If you take a look at these bullish hammers in the past, like this one off of the 100-day moving average, yes, we had tested it a few times before. You get this bullish hammer. Now you get the release in here. This is where you want to be more aggressive selling your bullish put spreads because support has been confirmed and you're starting to lift off and you've got a gap and go. You've got that support right in here. Okay, we're going up. Nice green candle closing on its high. Excellent. Here we got another one, bullish hammer off that 100-day moving average. Look at that follow through. Well, that's what we expected right here. I certainly did. Now, because of the character of the market, because of the weakness that I'm describing right now, you've seen this in my previous videos. No, I was not expecting the market to move higher and take out the all-time high. Wasn't expecting it. That is why I'm selling out of the money bullish put spreads because I'm expecting, yes, that the support level will hold in here, but I'm not expecting to be off to the races. When we sell out of the money bullish put spreads, we are distancing ourselves from the action. We are still selling out of the money. We are selling these spreads below technical support on the underlying stock. So we've got lots of cushion, lots of breathing room. We're picking the best stocks only, ones that have been able to weather this market selling, ones that are showing us that they want to move higher. And so, if we get a market drop like this and we retest that 100-day moving average again, those stocks should be strong relative to the market. They should hold up well, and they should still be well off of that major support level. And by the way, tick, 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 time premium decay working in your favor. So we've got earnings season unfolding. JP Morgan Chase, other major banks, Wells Fargo announced earnings today. Kind of a mixed reaction to them. Next week, earnings season is going to be dominated by those banks, but then we're going to start to get into some of the tech earnings releases. Sellers are typically fairly passive into those mega cap tech earnings. Why? Why? I don't know why. I guess it's because those earnings have been stellar. Five of the largest mega cap tech companies comprise about 23% of the S&P 500. So they're very important. And those earnings have been stellar even with COVID going on, even with supply disruptions because they are not impacted by that as much. So the point is that sellers tend to be relatively passive until those mega cap tech companies have reported. Well, guess when Apple reports earnings? And this is the next thing that you need to be conscious of is what's the next potential speed bump? What's the next fly in the ointment? Well, we'll take a look at Apple earnings, hover over the E127. So January 27th, Apple tends to be the last of the mega cap tech companies to report earnings. Well, once they report, some of the air is going to get let out of the balloon. You know what happens the day before Apple announces earnings? FOMC statement. Eee, that could be a little hawkish. We know from Powell's testimony that they're concerned about inflation. Forget about transitory, not happening. Now we're hearing persistent. Now we're hearing possibly 4 rate hikes this year by Bullard. So that is going to change the tone of the market. It is going to pressure tech stocks. So what do I do now, Pete? You're telling me to sell these out of the money bullish put spreads. Well, if you're following my advice, you've got your bullish put spreads on because you put them on early this week. You're putting them on last week when we hit the 50-day moving average. You should have some time premium decay working for you. If your stocks are weak, it's okay because the market is down. What you do not want to see is Relative weakness. You don't want to see on this bounce right here, the stock going ka-chunk, ka-chunk, ka-chunk lower. You want it leading the charge in here. You got a drop right now. It's okay if the stock is down a little bit. You just want it down less on a relative basis. Healthcare has been fantastic. The energy sector has been fantastic. I'm going to show you how to find strength within those sectors. I'll show you how to find the strong sectors, how to find the stocks that are strong within that sector. Those are your bullish put spread candidates. I've also been showing you how to find stocks in Option Stalker that have a tendency to rally into the earnings announcement. We also want to use that statistical advantage. So right now, you're not hitting the panic button because we've still got a long way to go before we get to that 100-day moving average. If the weakness in your stock is due to the market testing this major support level, you don't need to panic because as soon as the market bounces and holds the support level, the stock will stabilize because it's got relative strength. What you don't want to have happen is you don't want to see the stock all of a sudden giving up all of its gains and becoming weak relative to the market, sector rotation out of that sector. So let's get on with it. Let's take a look. What do I think is going to happen over the course of the next 2 weeks? I still believe that this 100-day moving average is going to hold. I still believe that time premium decay is going to work in our favor. But as we get out 2 weeks from now, as we get closer to that FOMC statement, I think you've got to be much more cautious. Cautious, does that mean buy puts? No, it does not mean buy puts. It means reduce your overall risk, see how things play out. If the market cracks down below the 100-day moving average and it closes below the 100-day moving average for a couple of days straight, yeah, that's warning sign. Then we need to know that all of a sudden the market is starting to soften and that the higher yields are impacting the market. Speaking of higher yields, always good to keep an eye on TLT and see what it's doing. You can see major technical support right around this 141 level on TLT. This is what's going to tell you what the market feels is going to happen with interest rates. We take out that 141 level, we can sell off on TLT. That would keep a lid on tech companies. I've been urging you not to do much in the way of bullish put spreads on tech stocks because QQQ is weak relative to SPY. Here we go. There's your QQQ. Let's overlay the major moving averages so we know where they come into play. And there we go. Whoa! Wait a minute. SPY way above the 100-day moving average. QQQ closing below the 100-day moving average, closing below horizontal support. Uh-oh. This is why you don't want to be out there aggressively selling out of the money bullish put spreads on tech stocks. They are weak relative to the market. We also have horizontal resistance, support, support, support. That is what I call a failed breakout. Multiple signs of resistance, lower high, double top. Yeah, you got to be real careful with tech in here. We haven't seen valuations like this in 20 years. We haven't seen inflation like this in 40 years. Well, the market's priced for perfection. That is not a perfect backdrop. So let's be cautious. Let's go back into the market. Let's take a look at what it's doing today. We'll go into the 5-minute chart because I want to spend a little bit of time on chart reading. Get a lot of questions about this. Get a ton of questions about 1OP and how to use it. I use it to help me time my entry and exit for my stock long positions. And you hear me say this time and time again. You have an edge trading stocks because you can lean on relative strength. Does that mean that I only trade stocks and that I never trade futures? No, that's not true. I do trade futures, and I like to trade futures when there are big moves and when I get the technical patterns that I'm looking for. So let's take a look at a few things that are setting up, and we'll take a look at how 1OP sets up also. I'll scroll back a little bit so we can take a little closer look. We'll go back 2 days. I can go back 10 days and show you 1OP over the last I could show it to you over the last 3 months, but this will give us a sense for what's happening. So you get this nice bullish opening, and you're all excited because your stocks are moving higher and you just want to buy because the market always goes up, right? Well, when you're in here and you start seeing this gap up opening, and 10p right here is on a bearish cross. So when it's above zero and it's crossing below the blue line, that's what we call a bearish cross. So here, a little bit easier example, rally above zero, that's a bearish cross right in there. This indicator is predictive. It is not reactive. There are very few indicators that are predictive. It took me 10 years to develop this, and that's why it works so well. So in here, you know that you got to be cautious. Let's put up the cross here. Right there's your bearish cross. Hey, wait a minute. We poked through the lower end of this compression here. So if you're in buy mode, I'm just going to use Apple as an example because a lot of people own Apple. Apple, Apple, Apple. I got to own it. Earnings coming up. Oh my God, I got to have some Apple. So when you come in and you want to buy Apple, and let's say that it's showing a lot of relative strength, and you see that this 10p indicator is ready for a bearish cross, you don't need to buy here. Just see what happens. We know that when we get this bearish cross, typically the market sells off. Well, if 80% of the time this happens, then it would behoove us to just be patient for a little bit. Just hold off. See what happens. Just see the beginning part of this cycle here. And if the market continues to flatline, okay, hey, I can buy some Apple. This may be what we call a bullish divergence. So if 10p was going down and the market did not go down, and it was doing this and the market was sitting right up here, that next bullish cross would be like throwing gasoline on the fire, and it would show that this is incredibly strong trend strength where you would get a breakout to a new high and then boom, 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 continuation. So you wait a few minutes and you go, ooh, yeah, I don't like this. I'm glad I didn't buy Apple. If you were trading S&P, you could have taken a short on that and done very, very well with it. We do have buy and sell signals also on the 10p indicator, but you can just read the chart and see what it's doing as well. So now all of a sudden you start to get this drop right in here and you've got a gap fill. Okay, that's a long red candle through the lower end of the compression. This is where you want to be shorting. So you get this 10p indicator, it comes in, and now it crosses. Let's say that on the way down here, you're in go-go mode. Oh my God, look at this stock. Roku is falling apart. It has the nastiest daily chart. I just can't wait to short it. Well, when you're down here in the cycle, and you see that 10p is in a deep trough, and you have a bullish cross, and you want to short Roku in here, wait a minute, just hold off on the short because you can see that the market is getting ready to bounce. I should wait at least 10-15 minutes. Maybe this 10p bullish cycle is not going to produce anything. I might as well wait and see. If it does produce something and whoosh, we're back off to the races, then I don't want to be shorting Roku. But in this case, you had a little bit of a clue. That clue was that you took out the prior day's low. So you kind of know that when you can break through that prior day low on the first shot, that's a little bit bearish. So in any event, you wait in here, you're like, okay, I'm going to do what Pete told me. I need to be patient on Roku. You get this bullish cross, and lo and behold, hey, look at that. The market rallied, and so did Roku. It bounced after heavy selling, but now I'm starting to see mixed tiny green candles in here. That is a sign of resistance. And this little move right in here was nothing but a short covering bounce. Okay, compression, draw your line here underneath support. By the way, I get asked all the time what indicators I use. I use 1OP. I don't use anything else. Yes, I use major moving averages. Yes, I use trend lines, but I use price action, candlestick formations, patterns more than anything. So in any event, these major moving averages I just keep up because if I have to go back to a daily chart, actually I'm going to right click and remove them because I like to keep my charts unobscured. So we're going to just remove those so we don't have to look at them. See how nice? So compression. Uh-oh. Looks like trouble ahead. This is where I want to be looking to short. You know what? If we break through the lower end of this little compression right in here, I'm going to short. Hey, we got a long red candle. Roku, where are you? Are you weak relative to market? Yes, you are. I'm going to short you because I have weakness in the stock and I can expect a big market drop like this. That is how you use these bullish 10P cycles and bearish 10P cycles to time your entry for stocks. So we get this big drop and bottom falls out of Roku. You're wondering, where do I take profits on Roku? This thing could fall forever. Well, here you've got your big bullish cross right here in 10P. You know that it's early. You're getting late in the cycle. You should take some gains. Do you have to take all the gains? No, you do not, especially if Roku is continuing to show you weakness relative to the overall market. But at least take some of it off. If you've got a bunch of short stock positions in here and you start to see a bullish cross pending, take some of the profits, especially if the stock is compressing on the low of the day and you get this kind of bullish cross happening on the S&P 500, take all the gains off. You can always reshort it on the next bearish cycle. Okay, so what if I'm looking to buy stocks? This is some pretty nasty, heavy selling pressure if you have the right stocks. Let's say that the energy sector has been super, super hot. Let's say that you are a long only trader, meaning you do not short. Okay, yeah, you can start looking for some opportunities in here as long as those stocks have been strong. So here we go again. We get our nice cross. You waited patiently for this whole wave of selling to run its course. Yes, you could, but you need to know that because of that strong downward momentum, that if you're going to be playing a bounce on a strong stock, if you're going to be playing a market bounce on a strong stock, that you need to be pretty quick to take profits. So you get this nice 10P cross in here. Now you got to be taking profits in here because this is starting to run out of steam. Got mixed candles in here, tiny candles. Now we get a bearish cross here. Let's highlight that. There's your bearish cross. Incidentally, some of you are going to ask me, what is 10P? How do I find out what 10P is? I'm not comfortable trading something I don't know. Fine, don't trade it. I'm not giving you my secrets. It took me a long freaking time and a boatload of money to develop this. So please, don't ask because I'm not going to answer your questions. Okay? It works. If you follow it, you know, you can track it, you can see how it helped you. End of story. I equate that to a weatherman. There aren't many good ones, but I've got one in Chicago that I follow. I don't know what damn models he follows. I don't know what he uses. I only know that when he tells me that it's going to rain, I better bring an umbrella. I don't question whether he's using the American model or the European model. I don't care. The guy's right. That's all I need to know. This indicator is right. That's all you need to know. So we get the bearish cross right in here. You can see how we've got a compression right in here. There's the low. Now all of a sudden on your longs, you've got to be super careful with them. Upward sloping trend line. You've also got your horizontal compression. There you've got your red arrow for the 10P indicator, but you had your cross back in here. This is where you want to be short again. So Roku, I took some profits on Roku. Maybe I took them all. Took some profits on my shorts, but man, these things are still looking pretty weak to me. D1 chart, nasty, nasty, nasty. M5 chart, nasty, nasty. Hey, here's that market tailwind I'm waiting for on the short side. See you later. Let's fast forward. Let's see what it's telling us today. This is the price action so far today. Going to go into some pretty heavy duty analysis today. I'll tell you what I think is going to happen today. First of all, you get a gap down today. Big, long, green candle. This has information. This long green candle right here came on a bullish 10p cross. So a nice little entry in here that you could have gotten long. But looky what we got right here. Bearish cross. We also have what I call a key bar. What is a key bar? A key bar is one that I can look at through the course of the day. I can go back and I can go, yep, that was a really good tell. That one bar told me what I could be expecting. In this particular case, you had a gap fill right out of the gate. So that's pretty bullish. That tells you that bulls are defending the market. Fill the gap, first attempt. Nice, this is all good. This is a warning sign because you would want the market to kind of hover and hold this point for a bit. You don't want to see too much chop in here. Oh, here's a nice long green candle to a new high of the day. But already in here, you're seeing signs of mixing, like mixed overlapping green and red candles. Well, that tells you that there is resistance. So I bought right in here. I also exited my trade right in here, and I scratched the trade because I did not like what I saw. I also saw that 10p was spiking like mad. Well, if I get that spike, then I'm expecting boom, 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 boom. I want to see that strength. When I don't get it and I get this garbage instead, that's a warning sign. That's resistance. So here I get this long green candle, which I exited, scratched the trade, continues to go higher. And yes, I'm thinking to myself, doggone it, that would have been a nice trade. But one bar later, and I stayed true to my indicator, one bar later, I'm like, whew, bullet dodged. Because I could see that it was spiking. Had it crossed yet? No. But I could see that because it was spiking, I should have expected liftoff, and I didn't get it. This red candle was a key bar. So I did short in here, and I took profits in here. Why did I take profits in here when we were just getting going? I didn't like all of these mixed candles in here. It told me that there was support forming. What I wanted to see, and if I felt that there was a chance for us to challenge the 100-day moving average today, here's the type of price action that we would have seen. We would not have seen a bounce like this, first of all, because this tells me that buyers are there. What we would have seen was just a very meager little 3 or 4 bars here, and then we start to compress, 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 and then long red candle, stack one on top of the other, take out the low of the day, first effort. That didn't happen. So the chance of the 100-day moving average failing and the chance for this to be an absolute bloodbath today was pretty much gone on this long green candle. So let's say that we want to once again gauge buyers. Is this just a short covering bounce early in the day? Are we going to get that move right now? Well, if yes, then this long green candle, or excuse me, this long red candle, you would need to see red, 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 and through the low of the day without any retracement. Very, very little retracement. Very few pauses. We didn't get that. And in here, I could see that support was building. Perhaps we get a higher low double bottom. I don't know. I only know that early in the day, bulls really defended that gap down. So I took profits in here. I made, I don't know, I think it was 5 or 6 points on the S&Ps. And you can see how, yes, we did get some follow through selling in here. That's kind of a key bar right in there also, because you try and rally, 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 and everything looks great. This is a long green candle while it was forming, and then in the last minute, Got to wait for these candles to complete because oftentimes the big move in that 5 minute candle comes in the last minute. A lot of traders use 5 minute charts. The character of that candle changed dramatically. Oh, this is pretty bearish. So there we go. We test the low of the day. So what happens on the low of the day? As I mentioned back in here, we've already seen some support in here. I needed to see us blow through it, and we didn't. So I suspected that this low of the day was going to hold. We get a little bit of a bullish 10p cross in here, and then we get a release. So how does the day shape up right now? I'd mentioned to my members that I felt we were going to spend time between SPY 460 and SPY 463, and we would probably chop around between it. Now, because we came down and tested the low of the day, this also is a clue to me. If we would have stopped right here, that would be a higher low double bottom. That would tell me that this was not a fake and that buyers truly want to be long. They are overpowering sellers. But because we tested the low of the day, it tells me that buyers are not overwhelmingly winning this battle. Sellers do have some say here, and that selling pressure is heavy, heavy enough to drive us back down to the low of the day. So if buyers were in full control, this is as low as we would have gotten, and then we would have started marching. Higher low, double bottom, start breaking through some downward sloping trend lines, and everybody's happy into earnings season. Didn't happen. So now we test that low and we know that both buyers and sellers have a say in what's going to happen. Both of them have been able to run with the ball. They've been able to move the ball. So that's why I felt that we would spend time within that trading range. Here's one pattern that I'm looking for later in the day, and 1OP is giving us nothing here. Well, why is it giving us nothing? Because there's nothing going on. Up and down and up and down and up and down and up and down. There's no momentum. It's telling us not a lot of momentum in here. Here's what I suspect we're going to see through the course of the day. We've tested the same support level twice. And I believe that we are going to test it a third time very soon. Do I think that it's going to fail? Probably not. We'll probably get a little bit of a bounce. And then off of that bounce, so 3 tests and a bounce. On that bounce, I'm going to be looking for an opportunity to get short. And the reason for that is that bye, 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 come down and test that same support low, bye, bye, bye. This is what we're taught in every book. Buy low and sell high and keep your risk very small and keep your stops tight. Well, I could go into a whole dissertation on what that actually means, but it doesn't mean buy the low of the day, okay? In any event, since this is what many traders do, they rationalize that I can get long here, I can sell here, I can get long here, I can sell here, I can get long here, I can sell here. So they start stacking up here because not everybody sells here. They start accumulating. And so when you see these dips in here and they get tested with greater frequency, this is a perfect place to try and trigger sell stops because you know that you've got buyers here, you've got buyers here, you got buyers here. Well, where are they going to put their stop? They're going to put their stop down here? No, of course not. I'm going to put it just below that price point. On the SPY, maybe 20, 30 cents below it, just to give them a little wiggle room. So when you get these long red candles through the low of the day, that move you're either short ahead of time, as I plan to be, so that when you come down and test the low of the day, you've got some staying power and you've got some cushion already built into the trade. When you take out that low of the day, I'll be watching for follow through. Do I just get one long red candle and a doji and then follow through? Do I get a long red candle and another red candle? That would be the follow through that I need to see to stick with the position. If I start retracing into that red candle, then I know that this was just to shake out shorts, or excuse me, to trigger sell stops. So they're just trying to shake out buyers. And then as soon as you get that long red candle, boom, 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 it retraces completely. Sometimes you get a bullish hammer, sometimes a bullish engulf, and then you go back into the range. So by shorting, I'll know that I have a decent opportunity to take profits. Then I have to watch to see what happens. If you are a trader and you want to short the market, you do not want to short it right here because you could bounce like that. So you've got to wait. Okay, so now I wait for the long red candle. Do I short now because we broke down? No, that's what they're trying to get you to do. They're trying to get you to short on that long red candle. So if you didn't get short here, hopefully you didn't, and you get that long red candle, you don't want to short down here either. You want to wait for at least 10 minutes, 2 bars, to see what happens. Do you retrace that red bar at all? Do you close on its low? Do you get that next red bar? If you get that follow through, you know you've got a decent breakdown and that you should follow that breakdown. So that's how you need to trade it. Let's go in. Let's see if we can find a few stocks. I'm going to show you a feature that I recently added to Option Stalker. This helps us find relative weakness on a sector basis. So we're going to go in and we're going to be looking at lists, and we're going to be clicking on sector ETFs. So when I click on them, I'll be able to see all the different ETFs. I can choose if I want an ETF that's got relative strength or relative weakness. If I'm looking for relative weakness, this XLRE is down 1.7%. This is down XLB 1.5%. Ooh, hey, XRT down 3%. Let's click on that and see what we got cooking here. Well, we can see all the stocks, we can see all the percentage changes, but here is what's really nice is we can see if it's on a sell signal on a 5, a 15, and a 30-minute basis. That would be really, really helpful because instantly looking at this table, I can tell where the weakness is. So let's go down and see if we recognize some names. Oh, there's Etsy. Let's see what Etsy's doing. I haven't done this, by the way. I'm doing this with you. That's nasty. Breaking below that 200-day moving average, long red candle stacked. You can see how the stock has been super weak today. Got the S&P starting to come in, probably going to test the low of the day. Yeah, this has been a nice short today. Let's take a look at another one, EXPR. Oh yeah, got the market right now kind of stalling, kind of flat. Let's get these buy and sell arrows off of here to clean things up a little bit. So market, yeah, choppy, up, down, not much. This stock, new low of the day. Hello. I'm looking for a short. That looks like a good one to me. I'm going to continue to go down. You can see there aren't that many that we really need to look at, but this makes it easier for us to find them. GPS. Oh yeah, had a nice little bounce here. Steady, steady, steady on the downside, breaking through this compression. Plenty of room to go on the downside. We have, and yes, by the way, 10P earlier this year, I did spend a lot of time optimizing it for individual stocks. You got a bearish 10P cross here. Okay, looks good. Everything looks good. Let's take a look at that daily chart. Eh, Not that special, but you do have a small upward sloping trend line here that's been breached to the downside. But I think we can find better. We can find something that is really cooking here. Let's go to the daily chart and let's start there because that's where all of your research should start. AAP, no, that's a good one. Amazon, let's just look at it because it's Amazon. Fairly bearish chart right there. BBY, not on a 5-minute, but yes, breaking below that horizontal support. Continue to go down and see what else we've got in here. I don't see anything right off the bat that's sticking out at me, so I'm going to continue to go down. You can see how a lot of these stocks, I do have a rule base on a 5-minute basis that gives us less signals during the course of the middle of the day, because on a day trading basis, that's really not a good time for you to be trading. Things tend to really, really quiet down. So I'm still looking at that daily chart, still looking for something that looks good. This is an easy way for me to do this. Upward sloping trend line here, still intact, 50-day intact. So I'm just looking for something I really like. This is good. This has got room down to the 200-day moving average. You can see it's below that horizontal support level. This looks pretty good. It's a choppy stock. Let's look at the M5 chart. You can see market drifting lower. Boy, you want to get on that early on if you can. So I want to find something that we can say right here and right now is a good short. On its low of the day, okay, market off of its low of the day, stock on its low of the day. Oh yeah, W. That's a really nice day trading short. I'm describing this to you. When you're actually doing it, this takes minutes. It doesn't take you long to find these trades, and it can't take long for you to find these trades because you got to get on the move right away. That's why we use searches. So XRT, let's see if we can find another ETF that might have some weakness, and then we're going to switch gears. We're going to take a look at stocks that look good. I haven't really talked about swing trading too much because I've done that in the last couple of days. So we had XRT super weak. Let's see what else we've got. XLRE, I'm not even familiar with which. Obviously, it is, looks like a real estate investment trust. And let's take a look and see what we got here. I don't see anything particularly good in this ETF. I am going to really focus on this sector strength and weakness in the course of the next couple of months, and this will be much improved. Now we can see we've got some weakness in XLB. I believe that is a basic materials sector. So yes, we can go in and see where we've got that type of weakness, 100-day moving average coming into play. Anyway, that is how we use that search. Let's go in and see if we can find those strong sectors. What is leading the charge? XLE. Let's go in and take a look at some of these candidates. There's one right there. SLB is on a 5-minute, 15-minute, and a 30-minute buy. Look at that relative strength. You can see how the market is drifting lower. This stock wants to go higher. So let's move this off to the side just a little bit. So you get your drop, market drop right in here. Get your bullish cross in here. Or you get your bullish cross in here. You could have identified that relative strength right away. Bullish 10P cross. Yeah, that was beautiful. Okay, you got this drop right here, downward sloping trend line. Okay, we're all good. Put up 1 OSI. We've identified that it's got relative strength. So this is all nice. Orange line above zero. Excellent. All day it's had relative strength, downward sloping trend line. That's where you want to get into that trade. And you also want to wait for this bullish 10P cross in here, which took place about in here. So you got really nice gains for your longs on that bounce. Remember how I was telling you about long only traders? Waiting, waiting, waiting. So if you come in and you get all excited that, hey, I've got this nice big bounce in here, you could have scooped this on the open, but if you wanted to be prudent and patient and see if this really was going to hold, you get this pullback. You're kind of glad maybe that you stayed on the sideline. You get this beautiful little bullish flag pattern right in here, and off you go. That's how we trade. It's a really good system. What excites me the most is when I go into the chat room and I see so many traders posting that this price action used to be random. There was nothing that I could look at in a chart that would give me any sense of order. All I see is garbage back and forth. I buy, market goes down. I short, market goes up. How do I make sense of all of this? The 10P indicator does that for us. The notion that market first, get your long-term market bearings, get your short-term market bearings, drill down to the best stocks, look for stocks that are strong on a daily basis, then look at those 5-minute charts and identify that strength on a 5-minute basis. That's how all the puzzle pieces come together. Traders that have been marginally successful for years, that have the technical skills, come in and they see how all these pieces fit together, and all of a sudden in the chat room, they start posting, oh my gosh, my whole trading turned around. I'm hitting 70%. I'm hitting 80% of my trades. That's what excites me. That's why I do this. And it's not just me. If you went through my chat room today, all I'm doing is providing market flavor and market color. Yes, I will post my S&P trades in there just to let everybody know which side of the market they need to be on, but that's not efficient. That's not an edge. Our edge is in trading individual stocks based on 1OP. So, yes, I do post those trades, but 99% of the rest of the posts are from members who have learned the system and who have demonstrated that they master it. You should really check it out. Look for the link to take the 2-week free trial. I think you're going to be super impressed. This is not like any other chat room you'll ever see, because I do play whack-a-mole with people in there when they post a stock that does not have relative strength. You're going to see focus, trades, professionals. This is not a chitty chat greet and meet session with a bunch of BS posted in it. These stocks have to fit the system, or I'm going to delete them, and I will eventually mute the user if I see it continue. Have a great weekend. It's an extended weekend. Please come in, take the trial. This is not a bunch of BS. You can see that in every one of my videos. Look forward to having you aboard. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.